Welcome back to KTM Investing. Today we are going to be talking about NIO, the Chinese electric vehicle maker that is often called the Tesla of China. NIO has just sent shockwaves through the automotive world, yet the news is barely being discussed on any US media outlets, while it's all over the headlines in Europe and Asia. Meanwhile, corporations and hedge funds have been buying like crazy, even as they tell you to sell or just hold. Morgan Stanley has sold a large portion of its stocks, but has been buying more call options to take advantage of the upside when NIO's stock price goes up. If you are not familiar with how options work, let me explain how this works in their favor to pick up more shares. If they sell 1 million shares at $4 per share, then they now have $4 million in cash. However, this how they trick investors that they no longer have faith in the stock and have now exited their position. But let us take a look at what really happened. They are now able to purchase call options at a discounted price with that $4 million. They are now able to use that $4 million in cash to purchase the January 2027 call options for $1.57 with a strike price of $5.50. The $4 million will then allow them to own 25,477 call options contracts, with each contract accounting for 100 shares. If NIO goes to $8 per share as analysts have predicted, then their $4 million will then be worth $6,369,250. This would be a profit of $2,369,250. Since the options don't expire until January of 2027, the upside is unlimited, and the amount the call options are worth will keep going up. So by selling their shares and buying options, that is a bullish move, not a bearish sentiment. If you understand this as an investor, then you won't believe the headlines they try to throw at you, making you dump your shares, while they increase their position by masking it as a sell-off. The other firms and institutions have not been as indirect about their purchases and have announced their accumulation of shares, with USB alone announcing the purchase of 40 million NIO shares. UBS Group, Bank of America, Citadel Advisors, Renaissance Technologies, and Susquehanna International Group all have large holdings in NIO, and they're quietly buying up shares while at the same time shorting the stock to artificially hold the price down, all while they keep accumulating more shares at this suppressed price point. The company has secured groundbreaking technology partnerships with luxury giants, Porsche and McLaren. These deals aren't just about selling cars, they signal a major shift in the electric vehicle landscape. NIO will provide Porsche with its cutting-edge ET9 suspension system, a product of the Clear Motion company, in which NIO holds a significant ownership stake. And more deals are underway with other car manufacturers, who are expected to sign before the end of the second quarter of 2025. This system, renowned for its performance capabilities, will be integrated into select Porsche models. The deal highlights the growing recognition of NIO's technological prowess, beyond just its own vehicles. McLaren is taking the partnership a step further. The British automaker will license NIO's entire technology stack, including the powerful NX9031 chip. This chip, already powering NIO's ET7 sedan, and now at the recently launched in their flagship ET9, which boasts industry-leading processing power and efficiency that is far superior to NVIDIA's Thor chip. The implications are clear. NIO's technology is top-tier, attracting established automotive players who want to electrify their fleets and boost performance. When it comes to innovation, NIO is truly leading the way, and that's exactly what's driving these new partnerships. The ET9 suspension, developed in-house thanks to NIO's stake in Clear Motion and their joint venture, is a perfect example. It delivers outstanding control and responsiveness, making every drive feel smoother and more connected to the road. Because this system adapts so well to different vehicles, it's no wonder Porsche wanted in. And the fact that McLaren is licensing NIO's entire technology stack, that's a real game changer. It opens up a brand new revenue stream for NIO, and really highlights just how advanced their technology has become. Take the NX9031 chip, for example. It's a powerhouse when it comes to computing. That means it's perfect for advanced driver assistance systems, and even autonomous driving. With this tech, McLaren and Porsche are both set up for the future of mobility. By sharing its technology, NIO isn't just selling parts, it's helping shape the future of the electric vehicle industry. And it's creating steady, recurring revenue for the company, all without piling on extra overhead. Moves like this could speed up electric vehicle adoption everywhere, giving other automakers access to proven, advanced tech, and giving NIO's bottom line a much-needed boost. Beyond these international partnerships, let's take a closer look at what's happening in NIO's home market. NIO is steadily expanding its footprint across China, and the pace of this expansion is quite impressive. At the heart of this growth, it's their innovative battery swap technology. CATL and Sinopec have stepped in, agreeing to share a big part of the cost to build out NIO's battery swapping network. That's a major commitment, and one that will significantly cut costs for NIO on their path to profitability. NIO has already set up a vast network of battery swap stations, and it's only getting bigger. Drivers can quickly exchange a depleted battery for a fully charged one. Now NIO is focused on reaching even more locations, so owners can swap batteries almost anywhere in the country. That's real convenience. This infrastructure play has caught the attention of major Chinese automakers like Chery, Geely, Chang'an Automobile, and Jack Group. Big names all on board to use NIO's technology to improve their platforms. And if you are enjoying this analysis of NIO, don't forget to subscribe to our channel for more financial updates, insights, and analysis. These new licensing agreements mean their vehicles will all use NIO's battery swap technology, which is a huge win for NIO, which will provide a brand new revenue stream. Moves like this are cementing NIO's role as a key player in China's electric vehicle ecosystem. The battery swap model, it offers real convenience and efficiency for drivers. It tackles two of the biggest concerns with EVs, charging times and range anxiety. That's a game changer for many would-be EV buyers. This approach is catching on fast in China, and NIO is leading the charge. BYD has recently announced a battery that can fully charge in just 5 minutes, but so far they haven't proven that it's a real alternative. Fast charging can still cause battery degradation, something NIO's swap method completely eliminates for its customers. NIO's recent deals are nothing short of impressive. When you combine those deals with its European, China, and impending Asia expansion, it's clear NIO has really strengthened its market position on a global scale. In a recent interview, CEO Jim Farley is now rooting for Chinese EV manufacturers to bring cars to the US. He thinks it will force domestic companies to innovate, just like Tesla did by manufacturing in China. This forced the Chinese to get better and build more technologically advanced cars and better-looking models in order to remain competitive in the EV space. Analysts are now predicting record deliveries for May, numbers that could actually beat expectations. Investors are eagerly waiting for NIO's next earnings report, coming up June 5, 2025. That report should give us even more insight into how the company's really performing financially, and if the end-of-year profitability prediction by the CEO is still on track to succeed. If you're a short-term investor, a buy-and-watch approach leading up to earnings is best. The exit your position right before the earnings report actually comes out to lock in profits. However, for long-term investors, dollar-cost averaging is your best bet to keep accumulating NIO shares. So just keep buying and ignore the short-term volatility. That means gradually building your position over time and focusing on NIO's strong fundamentals and its long-term growth potential. NIO isn't just an electric vehicle manufacturer anymore. It's evolving and becoming a global technology provider, shaping the future of mobility and consistently putting out high-quality, technologically advanced products. The company's technological innovations, its strategic partnerships, and its expanding infrastructure all position NIO as a leader in the fast-growing electric vehicle market. Now, if you haven't already, go ahead and smash that subscribe button so we can keep bringing you weekly updates, insights, and analysis. Thanks for watching, and we will see you in the next video.